Okay, recording this video after close of trade Thursday the 19th of August 2010, and I'm going to try and make this video as short as possible. I know I tend to go on and on in my videos a little bit, so let's see how quickly I can get through some of these charts. First of all, just show you a daily chart of the E-mini here. We ended up closing down 15.5 points. Pretty decent range with 21 points and decent volume with 2 million contracts traded, and we're back down at our cyclical support level here around the 1070 level. Talked about this over the last few days. This move would not be over until we see an end of trend warning signal on the 45-minute chart here, and that's what we got today. You know, we sold off pretty hard after the open, a little bit of a strength coming into the open, and then we sold off hard. I was finding data was bursting on my TradeStation platform. I had to close down all the windows except two, just to kind of keep up with the activity that was going on. Difficult trading when you've got your charts kind of just updating in bursts rather than smoothly, so that was kind of a problem for me. But anyway, the point is we're back down here at this kind of critical support level here. We've got our end of trend warning signal. The question is, we're on a knife edge here. This is make or break time. We either drop through 1070 or 1066 was kind of the low on Monday, or this is the point where we actually kind of turn around into a little bit of an uptrend. So just to show you on my longest time frame tip bar chart, the 40,500 tip bar chart, extreme, more of these exhaustion selling signals. We've had 4 of these in the last 3 days, which is just extraordinary activity. I said back here, we'd had our end of trend in the top of this move back up to 1127, I think it was, back up here. There was our exhaustion. We had 2 exhaustion buying signals up here at the top. That's kind of all the buyers have bought at that point. We've got our end of trend warning signal that signals kind of exhaustion in terms of price. We come back to test. All this bullish divergence activity in the market kind of sinks away. When we came into this first kind of low down here with our first end of trend warning signal, the point I was making at that point was we've not seen exhaustion selling on the downside, the down move to be kind of finished, particularly a down move. Down moves tend to end kind of with exhaustion selling. And what do you know, it's like in the last 2 days we've had 2 exhaustion selling signals on the downside, plus 2 on the upside. So we're really caught in this range, and I think it probably points to the confusion in the market. The divergence between kind of the bullish and bearish views at the moment is really kind of stark. Up here we've got at the 1100 level, the 1098, kind of the highs here was where the as far as the bulls could get us in terms of their buying activity, and then on the downside here we've got all this kind of almost like a triple bottom here down at 1070, 1066, and this is how far the bears have got us at this stage. What was interesting for me kind of on this time frame was coming into these lows towards the end of the day. This is a down professional bar at this point. That suggests that the professionals are buying into the close here, and then we have an amateur down bar just at the end there, which again is kind of the amateurs tend to get wrong foot, and we've started a little bit of a rally in the after session. So, but as I said, this is kind of really knife edge stuff. I'd love to see a bullish divergence pattern early tomorrow, and that we can start to see some rally from here. But if not, if we start dropping through 1066 and all the other markets kind of follow suit, then we're heading down. I still think we might be having a rally, but I'm open-minded. And just to go through the tick bar charts again, crude oil tends to be kind of correlated with the equity markets because of global growth and so on. And I was saying yesterday that we had an end of trend warning signal on this time frame. We've got all these bullish divergence signals here, and I said for me what was interesting, we came into this end of trend warning signal down here and there were no professional bars, no blue bars. We could see the professionals coming in and accumulating down here at 75, 76, and then they were kind of getting short a little bit at towards 77 down here, and we came back into 75 here, no professional bars. However, today there's our professional bar coming in, and this is our second cyclical turn after an end of trend warning signal here. We've got bullish divergence and we got professionals here. I mean, this feels really scary place to be kind of buying crude oil, but that's my trifecta here. This is end of trend warning signal, second cyclical turn after that, bullish divergence, professionals kind of coming in, so potentially we could see a rally in crude starting to set up here. The euro similarly coming into the lows here. So it was a bit more of a messy pattern, if you like. We had our pullback, we broke above that, and we've had our cyclical turn after that, which is an end of trend warning signal, but it's not printed on the chart as that because we kind of broke above the pullback level here. Coming back into these lows, there's the professionals kind of coming in, and this looks like a little bit of a flush. Similarly, a week ago we had this kind of flush signal here where exhaustion selling, bullish divergence, and then the final push down here. Greater selling that we had on the bullish divergence signals, but less than the exhaustion selling down here with those little Rambo patterns. The amateurs kind of getting wrong-footed right at the lows here. We've got similar kind of lack of selling at this point here, but then we've come into these lows at this point here with a little bit more selling. What I'm looking for is a cyclical turn on this Emini chart, on this Euro chart, to kind of coincide with that. So 27.50, 28 on the Euro is going to be a kind of key level going forward. And the rally in the bond market just continues to go up. We had all these professional bars here, continue to break slightly above that, and then today, the rally continued, and we've got more kind of bearish divergence at these highs. It's not a good sign in the long term for equities, but at some point, there's going to be a little bit of a pause in this, and I'm looking for a pullback and a down, moving down to a pullback in an uptrend for the bond market. And then, yesterday, funnily enough, we were talking about the copper market and this kind of exhaustive, explosive buying activity that we saw that set off this uptrend, and then the high early on in the morning copper market was marked by an end of trend warning signal here. Very weak buying, all these stopping volume patterns and profit taking patterns here, and we've come back down to this breakout level that we had at 330 a couple of days ago, and that's when the professionals kind of stepped back in. Potentially crude and copper are showing us some support, a little bit early in Euro for support. So tomorrow morning is going to be critical if we're going to hold this 1070, 1066 kind of levels on the E-mini. So this is it. If we're going to move into an uptrend at this point, tomorrow is going to be the start of it. Otherwise, if we kind of break below 1066, we're going to be seeing we're on a knife edge at this point, and the market will kind of keep on falling through, because at that point we'll have broken through our daily support at this point, and so potentially that could mean moving into a downtrend. So exciting stuff. Hope your trading is going well.